Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 15th, 2016. This was another bad week for the bears, the stock bears, as the indices pushed higher towards the all-time highs. However, there are bearish divergences that are appearing on the charts of the major indices. Bonds are breaking out to all-time highs, and this is showing fear in the market, in my opinion. US dollar finally made a stand, and of course this is weighing on various commodities and gold in particular. And we'll finish off with oil and natural gas, which may be ready to roll over. Okay, so this is S&P 500 ETF SPY in the daily time frame. So pretty powerful rally off the lows in February. This is a little bit over 15% rally, and this is like a very sharp and a strong advance. And when I looked at the history of the stock market, during the bearish periods, this type of sharp, strong advances is something that is seen quite often. So this usually happens when the shorts got covered. So for example, here we had a breakout above this level, and what happens usually, the short sellers usually place their stops just above the previous high. So when the price pushes above the previous high, the shorts get covered, and that implies buying activity or short covering. So then the prices pushes higher, and then again we see another peak, another breakout, another short covering activity. So this continues until basically it runs out of steam. Now we're pretty much at the resistance level because all-time highs are just above here at 209.70, I believe, for S&P 500 ETF. So we're certainly at a major resistance level going back about a year, I think. Now, this is a pretty good place for the bears to come in and attempt another to push the prices lower again. So far, the bears have failed multiple occasions. Right here, another attempt right here failed, another attempt right here that failed, and then another attempt right here. So this is actually a gap up here that is still not filled. So certainly a strong, powerful rally. But once again, I still think that this is a bearish security in the long term, and if we do roll over, we could easily take out these lows from February. There is improvement in breadth indicators, but here's an interesting one. I didn't actually mark it in the chart, but you can see this peak right here from mid-March versus this peak right here from mid-April, just today. See how the line is sloping down? This peak is higher than this peak. You can see it's the opposite in the price itself. The peak in April is lower than peak right now. The peak in March is lower than the peak right now in April. So this is a bearish divergence. You can see that participation, this is advanced decline line oscillator basically, is already decreasing. So this is a bearish divergence, and I'll show several more bearish divergences on the next charts as we go along. All right, this is S&P 500, the index itself, going back, let me see, a little bit over a year, 1 year, 2 months. So this is my proprietary market breadth index that shows, it's basically a digital signal. If the line crosses below this red line, that means we're in a bear market, and we need to get across above this green line above to become back in a bullish bull market. And so far you can see that we did improve somewhat. We're now at 2, where we were at 1. But we need to get above this line, which is above 4.5. So there's quite a bit of room for improvement as far as the breadth and the momentum of the stock market itself is concerned. Here we can see a pretty clear bearish divergences. You can see that the index itself is made a higher high right here in April, while the RSI, for example, this is a momentum indicator, is making a lower high. The same can be said on the several breadth indicators. The percentage of stocks above the 20-day exponential moving average and the 50-day exponential moving average made a lower high. And also the same as for bullish percent index, we can see that's making lower high too. Now, divergences in general, it's really difficult to trade off of them, but they could be indicative of upcoming peaks. For example, right here, back in October, we could see there was a divergence right here. In fact, we had a pretty long-term divergence here, October, November, December, before the actual waterfall event. Or rather, I'm sorry, I meant to say right here, there was a divergence right here because the index pushed higher and the underlying breadth indicator pushed lower. Here, there was no divergence. So, you know, they can be taken with a grain of salt, but it's something to keep in mind that right now we do have divergences. We are basically at resistance, maybe a little bit higher is the resistance because the resistance 2132 and maybe a little bit higher here. But it's already kind of getting into this area of pretty strong resistance. So I think if the bears are going to come in, this would be a good time. And once again, you know, this index, it is bearish right now, but it could become bullish. You know, there is not. Basically, we need to see improvement in the advanced decline lines and various underlying breadth indexes to see an improvement in the general posture of the market. But for now, I'm still treating this as a bear market rally. This could morph into the actual breakout and continuation to all-time highs and potential entry into the new bull market. Briefly, this is QQQ, the Nasdaq 100 ETF. I just wanted to show similar divergences in the QQQ as well. So as far as even beginning of March, looks like we peaked out at the percentage of stocks for about the 20-day EMA, while the index kept pushing higher. Now we have a divergence in RSI as well, right here. And also in bullish percent index for the Nasdaq 100. So that's another thing to keep in mind. Next is Apple. You can see that today we had a pretty big drop right here. You know, this is about 2% drop. And also Apple is reporting on the 25th after the market close, and Apple is something like 12 or something more than 12% of QQQ. So that's a big player in the Nasdaq 100. All right, this is bonds, TLT, Treasury, 20 plus year Treasury bond fund. I think this is a very bullish chart. We had several breakouts here in February, in January, and then an all-time high to in February. We had a correction here in the form of a fallen wedge of some sort, and then a breakout here in March and a continuation higher. So we came pretty close to all-time highs again and then corrected back. I think this pretty much held support here, and now we are rebounding higher. So I think the stage is set for TLT to challenge all-time highs here in the not so distant future. Also, we had a nice bullish divergence here that did work out so far. But in general, this is a bullish chart, and I think this is showing quite a bit of risk aversion by the investors. Similar picture, but I think it's even stronger. This is AGG, the aggregate bond fund, the diversified bond fund for the United States bond markets. Again, several breakouts. This was all-time high back then. Correction in the form of a pennant, breakout, continuation higher, breakout to all-time highs, and just continuation to all-time highs again. This Friday was pretty bullish action too, so we seem to be wanting to go even higher for bonds. Again, this is showing a risk aversion. Volume is good, and I think it's showing confirmation of this move up to all-time highs. Municipal bonds, this is also another one of those, just another all-time high here and another all-time closing high. My subscribers are long municipal bonds, and myself too. So this is really working out well. Municipal bonds are just really nice because they're very low volatility and they kind of have a stabilizing effect on the overall portfolio. So it's good to have bonds around, certainly. And especially right now, because I think that if we do roll over, bonds will certainly be a good place to be. Unless you want to be in cash, the opposite. The other thing is, of course, to be in bonds. All right, next let's look at the US dollar. Okay, this is US dollar daily time frame going back about 11 months. We came strongly down. There was a strong move down here from the highs in November, and we just kind of kept going down, 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 till finally this week we came all the way down to the October lows here. And for now, I think the support has held because we kind of pierced this through. There was a rejection candle, and the lower prices were rejected, and then next day we even gapped up slightly and continued higher. And this was dollar gained broadly against other currencies, for example, euro, Japanese yen, and the British pound. So far this is a broad rally for the US dollar. Of course, most likely we're going to come down again and test it again, but for now the support has held. There's even stronger support down below here in the 92.50 area, and if that, if we do come down here and not hold the support, this may provide further support. If this doesn't hold, we could really see some strong move down for the dollar. But for now, I think it has held. And if we look at the longer term chart of US dollar, and this is a weekly chart, and this is where we're at right now, about 94 or so. So the important, really strong support is around 93, 92.50, and if we do come down again and pierce that and close below it, we could easily correct back down to the breakout level from 2014, which is at 85 level or so. Now, I think that this is still could be a very nice bullish chart with a very nice cup and handle, and if we break out above this level, about maybe 98, and especially above the 10, maybe 100 level here, we could see a nice big move up by about 9%, which is the depth of this pattern. If that happens, commodities, especially gold, will come under pretty serious selling pressure, and I think it's already come under pretty serious selling pressure, as we will see in the next chart. All right, this is gold on a weekly time frame going back to the 1996. This is just like a line chart with no open, high, low, close. Just sometimes easier to visualize on a longer time frame. So green here is the US dollar, and yellow is a chart of gold. And you can see it's pretty obviously negatively correlated. So if one is going up, the other one is coming down. And actually that makes perfect sense because gold is priced in US dollar. If the US dollar gets stronger, gold drops. So what we had, the dollar bottomed out in 2011 here, and gold topped out in about the same time and continued lower. Down below here we have a coefficient, correlation coefficient, and you can see it spends most of its time in the negative territory, which does make perfect sense. Here's that little bump up we had for the past 3 days. You can see gold is already feeling the effect of it. So again, if we this is a 2014 bottom, and this could be a flag. So this is this leg, and this is the actual flag itself. If we break out, we could continue for the dollar higher. If this happens, gold will certainly be dropping, unless of course something happens like true inflationary pressure. But in that case, most likely the dollar will drop. So let's continue to the next chart, which is just regular, which is gold weekly chart. Again, continuation lower. This is the beginning of the bear market right here in 2012. This is another of my custom breadth indicators, and I use it to visualize whether or not gold is in a bull or a bear market. And gold was in a bear market since 2012, and even this big rally in 2012 was a bear market rally. So if you knew back then that this is already a bear market rally, you could have shorted it up here. We had multiple breakout attempts, but you can see that none of them were confirmed by the gold breadth index. Only the last one that happened just a few weeks ago was indeed confirmed. So right now I'm treating gold as a new, as being in a new bull market. However, let me go back to one of the other charts I have. I don't think I want to be buying up here. This is a pretty strong move of the lows here to the highs here. So I think it's overbought still. Gold needs to correct maybe to like this area here and then hold support. So right now we have a breakout consolidation. What I'm waiting for is for a throwback, and this throwback must hold. And the support, here, here, maybe even here, there must be a support held on this throwback. That is most likely coming very soon. If we do hold support, that will be another confirmation that the gold market, the gold has entered a new bull market. I mean, it's looking good right now, but you never know, because sometimes we have these major moves and then they just completely fall apart. And especially I'll be looking for if gold does come down to the $1,100 area. If it doesn't hold here, we may make a new multi-year low and break below these lows. All right, this is GDX, Market Vectors Gold Miners ETF, our volatile friend of gold. This is pretty strong move. This is a 52-week highs here, and then came back down. So, it's much more volatile than gold, and the move from here to here is almost 100% move. This was 12.40, and this is $23 or so, so almost 100% move. This is a very strong possible breakout. Again, lots of gaps below. There's this gap, which could be a breakaway gap. I don't know. We'll see if it gets filled or not. But there's this gap. There's these two gaps. And anyways, these two gaps, if we do come down, and like I keep saying, if the dollar strengthens and gold comes under pressure, GDX absolutely will follow gold lower. And so far we had a breakout. This is certainly a strong breakout, but we didn't yet have a throwback. And then so we have breakout. We need to have a throwback, and we need to hold support on throwback. And an obvious support level is of course here at around $18, consolidation right here, and this breakout level. So these are two pretty obvious support levels. The next support levels would be about the 200-day moving average. If that fails, we could easily make another all-time low, because these are all-time lows. And by then, if that fails, again, here is a gold breadth index, the same thing, but more zoomed in. This is entry into the entry into the new bull market by gold complex. So from this point on, I considered GDX to be in a bull market. If we come down all the way here, most likely by then this index would again signal that we're in a bear market. So we'll see where this all goes. Right, moving on with commodities, this West Texas Intermediate, the spot price on a daily time frame. Multi-year lows, rebound of multi-year lows. So this is a short covering rally. We had a rejection here at the 200-day moving average, and then we came down to around the 50-day moving average. And again, we're trying to go higher and maybe even break out. But so far, it looks like we have another rejection here at the same level as before. So maybe this is an important level. You can see here we had a low here and another breakdown, another attempt to go higher. So $43 area could be of importance to oil one way or another. So they're talking about production cuts, OPEC. I'm not sure exactly how it's gonna work, because what if they cut production, but maybe United States will just increase the production? I think there's plenty of capacity for the US producers. So, I'm not sure how this production cut will play into the oil price. But in any case, for now, I'm looking at it from a bearish point of view, and I'm only looking to short the rallies. And wrapping up, this is natural gas, spot price daily time frame again. Also, multi-year lows here in March came up above the 50-day moving average, attempted, so far failed, then kind of came above it. And then we kind of bounce in this little kind of large range here in a somewhat updrifting manner. But it looks like there is already resistance here at $2.03, $2.04. I think the bigger resistance is here at $2.172, but maybe we already are rolling over. I mean, we had pretty large, red candles here, so maybe we're ready to roll over again. We have some bearish divergences here, and even on RSI, also a small bearish divergence. Now, I had a comment last week about natural gas, because this is spot price. So you can see that this price right here is kind of weird looking, because there is a gap up here, and this type of charts, this is actual commodity chart, the gaps are quite rare. So I looked at the actual chart of natural gas futures, and it's showing something very similar. You can see that there's a resistance at $2.05 or so from the previous lows. Potential, support break right here, another support break right here. So there is already resistance up here. Of course, I think bigger resistance is up here and possibly even up here. But even with this, at $2.05, there is already resistance, and it's being established as we speak. So there's one touch, another almost touch, another two touches. So maybe we see another attempt and then the plunge down, something like that. Alright, that's it for this week's recap. Thanks for watching and have another great trading week. Please stay tuned on how to find us on the internet. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services that are now active. Please consider subscribing. You get 3 weeks free trial, and it's only $24.95 per month thereafter. You get access to my charts, exactly what I'm buying, exactly what I'm selling. I have an internal blog. Also, I have several videos that have to do with trading and various aspects of risk control, as well as just a psychology of trading. So please do consider signing up. The subscribers are getting really good results, I think, and I'm getting some very good feedback. I have a performance section here where I post the actual portfolio percentage change. The inception date was in 2015 October, so it's not a lot of history yet. And there's some backtesting results that I feature here as well. The blog, of course, is where you'll get this information, and there's a video section where I separate them out for easier access. Click on the social page, and here we have a link to public charts page where most of the charts that you're seeing in this video are going to appear. You have Twitter, Facebook, YouTube, stacked with accounts, you can find us there as well. If you subscribe to our mailing list, you'll get a special price for our trade alert services. That's it for watching. Thanks for watching, and have another great trading week. Bye bye.